Santosh Rao, Head of Research Partner, Manhattan Venture Partners, joining in. Santosh, very good morning to you right here from Mumbai. We've had a big trade deal announcement yesterday with the UK, but the India-US pact is still elusive. Do you see some pressure coming in till that August 1st deadline and some clarity that comes in?
Yeah, thank you for having me. Well, let's see where that goes. I know there's some sticky points in terms of dairy products and all the other areas that India doesn't want that line to be breached. But I think they're still talking. I was just reading one headline where one I don't know if it was a government official or the Indian government official that said that we might get one preferential treatment here in the US, the India might. So I don't know. I think it's still going on actively. Trump would like to have India done so he can show that things are moving forward. He's had some success with Japan. European Union is pretty close, Indonesia and all that. So I think he's moving along. He's happy with what he sees, but India is a big sticking point. He would love to have that. Let's see where that goes. I mean, there's no indication at this point that there is an agreement close by, but I'm sure there is some pressure, August. But that line already, the Treasury Secretary has said or implied that it's not a solid line. It can be moved around based on because trade negotiations are complicated. They take a long time, so that's not etched in stone. But it's going to be flexible. But that's definitely a line in the sand that he wants to get things done by then. So let's see. We don't see any pressure. The market's not seeing any pressure. In fact, they like what's going on at this point. The economy is proving to be resilient. The federal job market is okay. The data that you just showed, that's all showing good signs that the underlying fundamentals are still good. But have we seen the effects of the tariffs that have been put in place already? That's a big question. So we'll wait and see. At this point, we don't see it. It's slowly creeping in. But the consensus is that it's going to show up in the next two CPI reports.
That's an interesting take, Santosh. Good morning, Hiral on this side. Next to CPI reports is where it will show up. However, right now, the next big event that everyone is watching out for, apart from the deal between India and the US, you're talking about the Fed, which will be meeting next week. The consensus estimation right now is it will be a status quo. How are you reading into it?
Absolutely. I think what he's going to do at this meeting, despite all the pressure, he's going to set the table for a September cut. He's not going to do anything this one. So I'm definitely in that camp, and we'll probably have another one he doesn't need to do it. I mean, Trump would like things to get to 1%, and being a real estate guy himself, so any real estate guy wants interest rates to be low. That's understandable. And we've had presidents in the past who have put pressure on federal chair, the Reserve banks. So that's not unusual. But he's not going to do it. That's going to again spark inflation. He wants to control that. He's taken a lot of pot shots to keep inflation under control. So I don't think he wants to get ahead of that. So he still wants to see the impact of the tariffs. We just have frameworks everywhere. We have few things coming in, but we still have China, India, and all that. Nothing final there. European Union is a big one. So I think he's going to wait it out. He's going to say that in the conference call that yes, things are moving right. The economy, and in fact, he said that today. The federal chair said that the economy is doing well, everything's fine, but cutting rates, he's not committed to that. And now that he knows that his job is secure, so I don't think there is any pressure to cut any rates at this point.
Santosh, just
not that he cares. No one can touch him there by law. No one.
Got it. Santosh, good evening. And just wondering if you are constructive risk assets currently, or would you believe profit booking should be the name of the day?
I'm sorry, can you say that again?
I'm saying, are you constructive risk assets like equities currently or not?
Constructive on the economy? Yes.
On the markets.
Yeah, absolutely. I think what's going to happen is I think in the the market is definitely poised to kind of go on the way it's going, steady up. It's a steady melt up. There is still some concern on certain corners, but it's a melt up as we go along, and because the fundamental data, the data is pointing to a good economy. Job market is good. As long as the job market is good and the consumer is holding up, which he is, I think it's okay. Yes, he's cautious. He or she is cautious. He's going down the price line, but at least he's there. He's having a job. He has money in the pocket. So I think that's a good sign. So in terms of the companies reporting, which we will see more and more next 2 weeks, we just have to see where they see the tariffs coming in. But at this point, we haven't seen the reports that have come out. We haven't seen a big impact. Yes, the car companies have said there has been impact of tariffs, but I think the market has pretty much absorbed it. So yes, I'm constructive through the end of the year. Next year is where we'll see if the full impact of anything, if there is. But at this point, this year, I think we'll be okay with rate cuts coming in the second half and some regulatory changes, regulatory relief coming in the second half. There's a good tailwind coming into the second half. So I think I expect a good market for the next half of the year.
Constructive in terms of markets for the second half of the year. That's the word coming in. Thank you, Santosh, so much for joining us on the show and sharing the views.